Hey everyone, welcome back to Corporate Decoder, the place where we untangle the financial world. And if you think you know what a self-storage company is all about, stick around because this report is going to throw you for a loop. CubeSmart is back with their quarterly report, and while self-storage might sound simple, the numbers reveal a company navigating a complex landscape. Let us dive in and see what they are really telling us. First off, let us glance at the financial statements themselves. These tables are the heart of the report and tell us a lot about where the company stands. Looking at their balance sheet as of the 30th of September 2025, their storage properties are valued at a hefty $6.4 billion. That is a big number and shows you how much they have invested in their physical locations. This is up from about $6 billion at the end of 2024, indicating growth in their real estate holdings. Now let's talk about their debt. These unsecured senior notes are a significant part of their financial structure as of the 30th of September 2025. This number is sitting at over $3.2 billion. That is a substantial increase from $2.7 billion at the end of the previous year. This jump is largely due to issuing new notes to fund their operations and growth, which tells us they are actively borrowing to expand. Moving to the income statement for the 3 months ending September, we see their rental income reached $243.4 million. That is a nice jump from $230.9 million in the same period last year, showing they are earning more from their storage units. This is the core of their business, and it's good to see this key revenue stream growing. And the big question, what about the bottom line for the 3 months ending September 2025? Net income attributable to their shareholders was $82.9 million. This is down from about $100.8 million in the same period last year. It's not a huge drop, but it is worth noting that profits are a bit lower even as revenue grew. This difference often points to increased expenses or higher interest payments, which we saw earlier. This translates to earnings per share for common shareholders. The figure is $0.36 for this quarter, down from $0.45 in the same quarter last year. This reflects the slight dip in overall profitability we just talked about. Now let's talk about acquisitions. This filing details some major moves. CubeSmart acquired the remaining 80% of an entity called HVP IV for a staggering $452.8 million in February 2025. This means they have taken full control of 28 self-storage properties across several states. This is a significant investment and shows their strategy of consolidating ownership to capture more value. They also acquired smaller properties in 2024, like the Oregon asset for $10.4 million and the Pennsylvania asset for $11.5 million. These smaller deals add to their portfolio and diversification. Looking at the overall picture, total revenues for the 9-month period ending September 2025 hit $840.4 million. This is a solid increase from $798.5 million in the same period last year, a nearly 5% rise. This growth is fueled by their expanding property portfolio, both through acquisitions and development. But growth comes with cost. Property operating expenses also went up from $242 million to $262.8 million for the 9-month period. This makes sense as more properties mean more expenses from maintenance, utilities, and staff. Here's where we see a big impact. Interest expense on loans jumped significantly from $68.4 million to $84.6 million over the 9-month period. This is nearly a 24% increase. The report attributes this to more debt overall and higher interest rates. This is a critical risk factor for any company that borrows money. Let's look at cash flow from operations. They generated $472 million for the 9 months ending September 2025. This is a slight increase from the previous year, indicating their core business is still generating healthy cash. Investing activities, however, show a massive increase in spending. Cash used in investing jumped from about $73 million to over $513 million. This huge leap is dominated by that $451 million purchase of the HVP IV stake. This shows a clear strategic move to acquire and consolidate assets. Financing activities tell a story of raising capital. They took in $444 million from issuing unsecured senior notes in 2025. This helped offset the increased spending in investing activities and covers their operational needs. Returning to the overall profitability, net income attributable to shareholders for the 9 months ending September 2025 was $255 million. This is down from $289 million in the same period. The previous year, a drop of about 12%, while revenues are up. The increased costs and debt expenses are clearly impacting the bottom line. This translates to $1.12 per basic share for the 9 months, down from $1.28 last year. The diluted earnings per share also saw a similar trend, reflecting the reduced profitability on a per share basis. Looking at a key operational metric, realized annual rent per occupied square foot held steady at around $22.99. This suggests they are able to maintain their pricing power even with market fluctuations. The company also details operations in a segment called Hines. This is one of their consolidated joint ventures where they own a significant stake. The balance sheet for this segment shows substantial assets and liabilities. The report mentions self-storage segment revenues are up about 5.2%. This is good news, indicating continued demand for their services. However, property operating expenses are up a significant 11%. This means the cost of running their properties is increasing faster than revenue on a relative basis. Interest expense on loans shows a concerning 23.6% increase over the 9-month period. This is a direct consequence of higher debt levels and rising interest rates, which is a major headwind for CubeSmart. Finishing up the income statement analysis, net income attributable to shareholders actually dropped by over 17% year over year. For the 9-month period, this decline underscores the pressure from increased expenses and debt costs despite revenue growth. Cash from operations increased slightly, but it is the investing and financing activities that really tell the story. They used over $512 million in investing activities, mostly for that big acquisition of HVP, IV, and they brought in over $78 million from financing activities, largely from issuing new debt. Interestingly, under item 5 other information, there is a section on trading arrangements. It states that no new trading arrangements were adopted or terminated by officers or trustees. This is a standard disclosure, but it shows a commitment to transparency in their trading activities. We also see the required certifications from their top executives, the CEO and CFO. This is a procedural step confirming they stand by the accuracy of the report. And now for my take on CubeSmart based on this report. The company is on a growth trajectory, acquiring significant assets like HVP. However, this expansion is being financed with a considerable amount of debt, and rising interest rates are making that debt more expensive. This is squeezing their profitability as their net income is down, even with revenue growth to stable rental rates. Per square foot are a positive sign showing pricing power, but the rising operating expenses and debt servicing costs are significant risks that could impact future performance. The company is clearly betting on continued growth to overcome these challenges, but investors should keep a close eye on their debt levels and interest rate exposure. What do you think about CubeSmart's strategy and their financial health? Let me know in the comments below if you found this deep dive useful. Give this video a thumbs up and subscribe for more corporate breakdowns like this, and join our Discord community linked in the description for more discussions. Thanks for watching. See you next time.